TransUnion SA Consumer Credit Index showed consumer credit health has deteriorated marginally. Now, this means that South Africans, you that is, the consumer, are still sitting with a lot of debt to work through before you can free up more disposable income to spend that money into the economy. Now, to discuss this, we are joined in studio by OneLaw COO Arnoud van den Bout. Arnoud, good morning to you and welcome to AM News.
Good morning.
Now, talk to me about this mechanism that one would use in order to free up debt and to collect debt. How do you do that?
There are various ways to collect debt. One can distinguish between soft collections on the one side and legal collections on the other side. Now, we play in the legal collection space, but just to maybe briefly introduce soft collections, it's a way where call centers, they phone debtors and try to make a rearrangement of the repayment schedule, or they implement debit orders against the debtors to repay. So that's a soft collection space. So we do legal debt collections, or we facilitate that. And there are two main tools that are being used. Either you can get a judgment by consent against the debtor, or you can get a judgment through a summons route. So that's a forced way of getting a judgment. But both have to result in a payment tool. So in the end, you get either a warrant of execution, so people can take your property away. We don't use that tool currently in our business. And the other one, a big tool to use, is an emoluments attachment order. There are also other very small tools.
What is that emolument attachment?
Emoluments attachment orders are an order given by the court towards an employer of a specific debtor, asking that employer to pay over a monthly installment. So the employer takes it from the salary of the debtor and then pays it over.
It's a garnish order.
Well, technically, in common parlance, yes, it's known as a garnish order, but technically a garnish order is an order which is totally different in terms of the Magistrates Court Act. But not many people use it, so people can use garnish for emoluments attachment orders.
Is that the main business of your firm, OneLaw?
We support lots of attorney firms, well, it's not a lot, there's about 4 of them, to effectively collect debt. And thus we supply IT systems, but also lots of networks to facilitate the debt collection process. But garnishes, or these emoluments attachment orders, form a big part of our business, yes.
Now let's talk about that. What are the implications of abolishing or limiting the use of payments or emolument attachments orders as a form of legal collection by the credit providers?
There are currently quite a couple of problems in the market. People are quite overextended, as you've mentioned before, and because of that, they struggle to keep their budgets in line and to get repayments in place. Now, all that an emoluments attachment order is actually doing is re-implementing that installment that you need to repay to the banks or other credit providers, or even to maybe a dentist or a vet, and to ensure that it's monthly repaid. But normally those installments are far smaller than the one you originally agreed to with the credit provider. So it gives a lot of space for a debtor to actually live, because he has to repay less over a period of time.
Now, the TransUnion SA Consumer Credit Index showed consumers' credit health has deteriorated marginally. Should there be programs put in place really to educate and spread awareness and stress the importance of avoiding debt and living within your means as a consumer?
I think it's absolutely crucial. There are lots of efforts done by government currently to put that in place. Number one is to put in place consumer protection legislation that is enforcing the National Credit Act, but also the Consumer Protection Act. Those are 2 examples, but there are far more efforts that the government undertakes. For instance, through them, the Banking Association of South Africa issued a statement about 2 years ago in which the banks undertook to help with public education. So there are lots of efforts being undertaken by the National Credit Regulator, by the banks, but other credit providers, to ensure that people understand that you have to live within your means and that you can only obtain loans that you can afford to repay.
But who is to be blamed then for the consumer ending up in debt? Is it the consumer themselves, or the lack of consumer awareness on the consumer side, or is it on the side of marketing that's just very good?
I think one has to look at it in a context. If one looks at the National Credit Regulators reports that come out on a quarterly basis, you can find it online. They highlight that since 2000, say about the year 2000 up till now, there's been a vast increase in the uptake of credit. So a lot of credit has been extended, but the biggest growth has actually happened in the unsecured space. So although there's growth maybe in vehicle finance or in other parts of the credit market, mainly it was with regards to the unsecured space. Now, That could be for a couple of reasons. Number one, the consumer wants it, so he takes a decision to take out a risky loan or to take out a loan that is unsecured, which is naturally, there's a higher interest rate coupled to it. But on the other side, naturally, credit providers want to extend that credit. So there are two parties playing in this specific market. And I think one of the problems was that the National Credit Act was not very clear with regards to affordability guidelines, for example. Recently, I think this week, is actually a new change proposed with regards to the National Credit Act to actually fix that problem.
How important is it, though, to educate consumers about this, and especially taking out a loan, so that they know what are the pitfalls and so forth in taking out a loan?
I think it's crucial. You have to just look at your own, say, budget to see how quickly you can get stumped off the edge. You just need to miss one installment of your salary and you're probably in deep trouble. And that applies to the whole country, to all the consumers. Now, you can even see it in the market where there are 20 million, give or take, credit active consumers. About 9 million are debt stressed, and that's quite a high volume of them. So it's about, currently, I think 41% of them are debt stressed. And that's are actually on date. The rest are debt stressed. So it means a big portion of our population is struggling.
Arnoud, your advice to those currently or consumers sitting in debt and those considering taking out a loan, what would be your advice to them right now?
I think what is important is you need to understand what you're signing up for. So if you're signing for a credit agreement, just make sure you understand what the document says and understand that you need to repay that loan and that it should fit within your budget, number one. Number two, educate yourself with regards to what abuse is, because there's a lot of abuse in the market in terms of credit extension, but also in terms of credit collection or debt collection. If you know what that kind of abuses are, for instance, people can't phone you after 9 o'clock to say, please repay my loan. But there are various other examples. So if people start to educate themselves, they're a bit more informed to make decisions. A second thing is, if you're in trouble, and many people are in trouble, work together with the debt collector to actually get yourself out of the troubles. Those people, they also want to help you to get back into the market. Naturally, they do it for a profit, but it's important to understand the context of the whole matter. You need to repay your loans, so you need to be wise with your finances.
Arnoud, thank you so much for joining us here on AM News.
Thank you.
Now that was OneLaw COO Arnoud van den Bout, unpacking for us the variables and affecting the debt industry in our country. Let's now move on to other stories.